In this video, we are going to be analysing Tilray, ticker TLRY. If you want your own stock analysed, throw that in the comments. We'll get around to it when we can. Now, what we can see is we're down 20% on the day. We're sitting around $1.85. Why is this? So the catalyst of this was they announced the pricing of a registered offering of 150 million of unsecured convertible senior notes. So that's firstly the catalyst on why we started moving. Now, what are those key support and resistances to be paying attention to from here? So what we can see is on this release, we basically came down perfectly to our first deviation on the 6 month. And again, on the left, we have a 6 month chart. On the right, we have a 1 year chart. So we can see we came into that first deviation on the 6 month, but that lines up near enough perfectly with our first deviation on the 1 year as well, which is at 190. So basically that's a 2 cent range between our statistical, our first standard deviation channels. So again, this is going to be a key support, and that's why we can see we got a temporary bounce off here. We tested that $2 pre-market, market open, we got that snap down, and again we're coming back to kind of retest this level now. So this is going to be key because this will most likely give us a sense of direction. If we fail to kind of break above this level and we kind of just come back, test this and start to push further back down, we do have targets, but that's going to be at $1.32 to around $1.35. So if we do sell off, there is quite a big downside potential. So just because it's down 20% today, again, may not necessarily mean it's a great time to be investing in it. It's all about how we react to this level. Again, if we come into it, retest it, fail, then again 135 to 132 is our target. On the other hand, if we're able to break above it, come back to test it as a support, and then this level can hold, then obviously we do have upside targets, and we'll go over those now. So our upside target would be around 240 to around 250. This is our statistical mean between that 6 month and the 1 year chart. So this is our statistical mean. This is considered fair value on a stock. So what this means is if we're doing a reversal trade, for example, if we're buying at this low in anticipation of taking it back to 240, that's really going to be our final target, because that is considered fair value. If we're trading reversals, you know, we're trying to trade to its kind of mean, to its fair value. So that would be my absolute final target, around 240. But again, that's still a massive amount of upside. You know, that's just under a 30% move. You know, holding past there anyway would be relatively greedy. But even if you do want to hold past that level, again, just make sure moving stops, locking in profits, at least some into this level, because again, high probability, well, not even a high probability that we start to reverse into this level. Really, then it just comes into a 50-50 gamble past this level. Now, if we do break further up, we do have final targets around 290 to 305. This is the first deviations to the upside. So I think those are going to be the key levels we'll cover. And what we'll do is we'll highlight all of these to make these clear. So again, what we have on, well, where we are now, what the main focus is, how do we react to this 190? Do we come back to test it as this resistance and fail? If so, 130 is going to be that target. On the other hand, if we're able to break above, come back to test it as a support and hold, then we're looking at a target of around 240. That's going to be our range. And then really, again, to me, there isn't much trading opportunity to take between this range, because again, that's too near to the mean to me. I don't really want to be buying in this range. So to me, the next trading opportunity, if we push to the upside, would be around 290 to $3. And this is where I would start to turn more short bias on it and try and catch it short. Now, one last thing to go over with these kind of stocks is you can see on the 6 month, we are trending down. On the 1 year, we are in a strong downtrend. When you're strong downtrending on both these charts, really, I don't want to be trading these long buys. So yes, even though we're at a 52-week low, doesn't mean I want to be buying it, because there's a reason we're hitting these lows in it, because they're not fundamentally sound, or again, there's just a lot of risk on the table. So you're always taking that risk if you're playing them short buy. So what I prefer to do is wait for them to pop up to kind of overbought area, so starting from that 290, and then really just trying to catch these short buys. Again, if they have options, we can short the shares, buy the calls to define that risk. But that is a breakdown on Tilray. If you enjoyed the video, why not drop a like and subscribe, and check out this analysis video.